Hello and welcome to the weekly market update, where we review the action of the week and see what's setting up going into next week. If that's what you're into, stick around. All right, hello investors and traders, and what we're looking at here is the S&P 500, ticker symbol SPY. And yeah, what a week, straight up, pretty much. Had some pullbacks throughout the week, but generally ended the week higher, stronger than what my expectation was. But nonetheless, hey, here we are. We're right at the scene of the crime, so to speak, right back where the tariffs were announced. And yeah, it took, what is that, 2.5, or I guess 2 or 3 days to take the market down. And what are we? We're back. It took us about 18 bars to get us back to where we were. So interesting spot. This was my target for the bounce. Hey, it's been very strong, so we could actually continue higher. But I'm a little bit more skeptical. I actually did, just for some protection this time around, start getting into some, well, at least in the public account that I started, during this year, I bought some put spreads on the QQQ, but in other accounts, I'm like selling call spreads out in July. But yeah, I mean, we're right back at the scene of the crime. I'm kind of relating it to, this bar right here, where this was on a Fed day and we had some really nasty candle. And, every time we got back to the scene of the crime, boom, gap down. Scene of the crime, boom, gap down. Okay, it seems like the coast is clear, boom, and then the big downtrend starts. So, we could continue onwards and go higher. And I got some analogs I would like to show you guys, like of where I think we're at. Or we could, start to go down again and test some levels. That we were basically around 510, 520 area. But here, let me show you guys, before we get into the market monitor and the portfolio, let me show you the analogs that I was talking about. So yeah, here's the weekly time frame of the S&P 500. And I basically just took the waves of 2011 and 2015, and these are the wave charts. Essentially, what the moves were, and how many weeks and what the drawdown was. So we were looking like this, and both of them kind of got to where we are today. Now this drawdown is much quicker, right? Instead of going down for 3 weeks, like in 2011, it was down in 1 week or 1.5. And then instead of taking, what is that? 1.3 months, it took 2 weeks to do the same amount of moves. So it's very volatile up here, which is akin to a longer term top. If it's this volatile and it's, basically getting all these moves in half the time, or even a third of the time it took previously when the bull market was just starting. Because remember, like 2011 and 2015, which these analogs are from, that was when the bull market was just starting. So that's interesting. Now these are the percentage moves. Could it have the same shape where, in 2015 it goes back to highs? 2011 didn't go back to highs, but maybe it takes the same shape, and so in terms of the magnitude of it, it goes much more. That could be the case. Here, let's go back to the daily chart. But we also did see something like this back in 2022, where we kind of rallied, had this kind of crazy rally that had no down days, no distribution. And I'll show you guys the market monitor in a moment. But, we had big day, test, big rally, over all the moving averages. Then it kind of stalled out. But it's kind of similar to this, where it's extremely strong. action. So something to consider. Let's dive into the market monitor and go from there. All right, so here's the top. Okay, so yeah, for those of you guys who are new to the channel, this is basically, you know, how I track the movement of the market, what it tells me, the internals. Over here on the left side is O'Neill School of follow-through days and counting distribution days and all that, which is a video I should make by itself to explain this at another time. But I also kind of improved it, okay? So I added some stage analysis. Basically, stage analysis is where you track stocks that are in, uptrends versus downtrends versus sideways after an uptrend or sideways after a downtrend. And yeah, you just basically track them. So right now we see 37% of all stocks are in uptrends, and it's above the 16-period moving average. And then 44% of stocks are in downtrends, and it's below the 16-period moving average. And then we have 10% of stocks that are in stage one, which is basically a sideways action after a downtrend, 10%. And then stage three, which is a sideways action after an uptrend. Okay, so yeah, I mean, the more stage one stocks, the more of a longer term bottom it could be. But seeing as how we came off of, this many stocks in stage three, it was kind of looking like more of a longer term top. So just, something to consider and watch and monitor closely, But yeah, going onwards, some of these other indicators, like I tracked the range of the day, how much the index had moved. So we moved another 1.5%, so I marked it as another follow-through day. So now this follow-through day rally has had 4 follow-through days with no distribution. Very, very strong. So what I wanted to do for a moment here is I wanted to go look back at 2022 when we had that very strong rally. Where was it? Let me just double check here. Where we had that really strong rally at the beginning of the year. It was in March. Okay, so let's go back to March. And then let's take a look here. So this, yeah, okay, so March, we had 1, 2, 3. Wow, yeah, similar, very similar, but a little weak right here. We had one distribution, 1, 2, 3, 4, 5, 6. On the 7th day, we had distribution. But it's very similar, we have this 1%, 2%, 1%, 1%, very strong, days in this rally. And it basically ended very abruptly, which is what I'm leaning towards that's being the case. Also, similar higher highs, like higher high, higher high. That's what this HH means. So, and then, but we're not seeing the 20% bullish, but we are seeing the same kind of VIX decline here. Okay, so let's go back to the market today. So yeah, we're seeing the VIX declining. It's back at 22, which is, it's very similar. So the trend, this is the 10-day trend indicator, which the trend basically just tracks up volume versus down volume. And, these guys are pretty aggressively selling into this thing versus here where they were buying it. Below 1 is when they're buying, and then above 1 is when they're selling. Yeah, but I've never seen this many higher highs in a row of this magnitude. This is pretty incredible. And I guess we did see 20% bullish stocks earlier in the rally, so that's similar as well to the 2020 rally. Yeah, unfortunately, I don't have the data going back to 2011 and 2015, so I can't, use my market monitor to look at that. But 2022 is something, that's good to look at as well. So moving onwards, okay, so now we're starting to get more stocks that are extended above their Bollinger Bands, their 45-day Bollinger Bands, which is what I track here. And then, today I saw a lot of stocks I'm in, like we're up 15, 18% today. Like I'm in this Aurora, which is up 18% today. It seems pretty climactic. Climactic meaning, at the end of a move, you see big moves. Like at the end of a rally that's been lasting for 9 days now, you see big moves, and that seems like what's happening today. So I wouldn't be surprised if we pull back next week. Yeah, because you're already starting to see. I mean, this is the short-term momentum up indicator, which has been declining. So under the surface, there's been some selling. Um, yeah, and as you can see here, short-term momentum down. But it's interesting that the indexes are going up and not showing any distribution, even though we're seeing distribution under the surface. Another interesting thing. And the TD cell is lighting up, meaning it's, short-term overbought. And the anxiety index is still high, and we're ticking down. Like towards the end of this rally, on the long-term breadth, we're actually going lower. So I'm thinking like the next time we get a decline, it could push the long-term breadth negative and start the bear market. So those are some things I'm watching. That's what the market monitor is saying. Yeah, so let's go back to the main screen. Yeah, I mean, as far as like stocks in the portfolio, what's the S&P 500? What are we down? 3%. So yeah, I mean the portfolio is not doing. Oh, let me show you. The portfolio is not doing too bad. Where is this? So the portfolio. This is there's something messed up with this. Okay, so the portfolio is actually outperforming the S&P 500. It's only down like about 2,000 now, which is great. So we're outperforming S&P and doing pretty well. Yeah, I mean, I had this Tempest AI doing really well. Aurora was up 18%. Tempest was up 10%. Um, yeah, all these Chinese stocks are doing pretty well. But we're gonna have a slew of earnings next week for my account, so it's gonna be pretty interesting to see. Yeah, we got a lot of these fast moving stocks reporting earnings. So, and then we got some of these gold miners reporting earnings, and some of them are not. Like this one reported earnings here. Hopefully it works out. Yeah, I've sold some calls on these, just to hedge, just in case, but that's unfortunate. Yeah, because I also had this FTAI. I mean, in the public account that I started here, there's not enough shares to do a covered call, but in my other account, I was selling a lot of calls on this thing. Uh, but yeah, so big moves this week. What are we looking at next week? Yeah, Aurora, which is the trucking, self-driving trucking. Yeah, we had Amazon report earnings. It didn't really do anything. It was down at one point and then it bounced back, and so it's not acting the best. Um, we had this MGA. This is a Canadian auto part manufacturer. This is my kind of play on like humanoid robots, like in terms of America. I could be buying like JBL or, uh, JBL is one that I was looking at, or MOG A. Probably better stocks than that one, but that was more of like a trade war kind of play. So we'll see. I might have to kick that can out of the portfolio. Let's see. Yeah, so like some of these stocks have been going straight up. This thing's up like 60-70% year to date. Where is this one? Yeah, us up 78%. So I sold some calls on this because it's coming into an area. And that's something actually I could kind of talk about, um, things that I look for and what I'm doing and how I manage these positions and how I enter. Um, this little indicator up here is the yearly distance, or the distance of the stock from the yearly moving average, this green moving average, and then the quarterly distance. So this red moving average is the red line, and then you see how much percent away the stock is from those moving averages. Because I'm starting to notice, like, a lot of these stocks trade on relativity to those moving averages. So if you go back in time and you look at, okay, this is historically where the stock has bounced, like in terms of the red, the quarterly moving average or the yearly moving average, right? This is historically where the stock has bounced back from underneath or bounced back from above. It can make for trading opportunities, and it's kind of what I'm looking at here. Even in this massive uptrend, and even in this range, STNE kind of once it got, can't see that number, but once it got about 30%, 30% away from the quarterly moving average. It's going to go sideways for a little bit and let the moving average catch up. It could still make a new high, but it's at least going to let this moving average catch up. So, you sell some calls into that thing. I mean, we do have earnings next week, but I doubt that they're going to push the stock up like where it is. So, yeah, that's one thing. We got Tempest next week. Similar thing. This was a great buy down here. I'm looking at it, up here for the target. What is that? It's up. Yeah, that would be 50% from this moving average, which would be right here at $90. Which I probably have to move some of the calls that I've sold. Oh no, well, that's in a different account. Yeah, because some of these calls were at 70, when I was selling them, and they're flat to down because I was like selling them over here. But that's something to keep note. Yeah, what else? Moving onwards. I mean, I don't know. I could go through the whole account, but maybe that would be too long of a video. But yeah, similar story in PAGs. This thing is, what is that, 23% above the quarterly moving average. And so, it makes for a nice little mean reversion. So you saw calls on it. I'm still long. Going to hold the shares, but at least you could, just generate some income while the stock goes sideways. Yeah, Tesla. This thing is actually setting up here because, I mean, who knows? Like, I'm thinking the market's going to go down, but I mean, this looks like a nice little setup here. So I think Tesla's set up for another big move. Going into next week. Same with some of these. Where was this one? Yeah, this one's just grinding. Yeah, GME setting up for a big move. It's just hanging out right there. And what else? What was another good one? Yeah, I think this Tiger is probably, I think, one of the most explosive stocks if we get a China trade deal. It's been really good. It's been holding up better than China. I mean, this is when everything hit the fan, and it's above it. So, and if you compare it to KWeb, it's still not above here. And then also, if I look at BABA, BABA's still not above it. And then if you look at Futu, which is another Chinese, it's still below. So Tiger seems to be outperforming a lot. If we look at some of the other big movers, yeah, I mean, Casey's another good one. This is a Chinese stock. But the one I'm long, another Chinese stock I'm long, which is kind of lagging, is this IQ, which if it kind of overcomes this range, which it tried to today, and then it has earnings next week, I think it could go and do really well. Yeah, I mean, so that's pretty much it. Oh yeah, ELF is making a nice move as well. It's right back here at the quarterly moving average, and we'll just have to see how it responds. I mean, typically in last time it was in a downtrend, it got what, above 20%? Yeah, 20% above the moving average. So if we do 20% from here, that takes us to like $82. So that could be a nice play for next week. Yeah, what else? Yeah, I think that's it. So, hey, thank you guys for joining. And yeah, I really appreciate, I think we got 10 people who kind of queue in every week. And I really appreciate you guys. It means a lot. If you guys have any questions or want me to check out a stock that you guys are in, I'd love to do some technical analysis on it, Wyckoff analysis and help you guys out. Yeah, I think that would be, hey, anytime. So leave a comment down below, like and subscribe if you enjoyed the content, and really appreciate it. And I'll see you guys on the next one. Have a great weekend. Cheers.